Good morning. You're joining us live on Midcap Masala. My name is Snehi Shah. With me is Harsh on the show today. And with us in the studio, we have two very special guests joining us. The management of the IPO of Vidya Wires, the IPO that's opening today. We have Mr. Shyam Sundar Rathu, the chairman and whole-time director, and Mr. Shailesh Rathi, the MD at Vidya Wires, joining us. Gentlemen, so good to be speaking with you. Good morning and thank you so much for your time and thanks for joining us in the studio. Let's begin by understanding a little bit about your IPO and the financial contributors. A lot of segments at play that make up the overall top line. If you could give us a breakup of which segments are performing better and what is the mix looking like?
So basically, we are in winding and conductivity products. We manufacture enamel copper wires and other 12 product categories in winding wires. And we are coming with a new expansion. So currently, we are having 19,000 metric tons of capacity right now. And we are adding another 18,000 metric ton capacity. Okay. The market is very bullish. If you see in the renewables, the EVs, basically we supply to those segments and we feel that that's going to be really power and distribution segment with transformers basically. So these are quite bullish and the company is currently raising equity of 274 CR of which 140 CR we are looking for the new expansion plan and 100 CR going for the working capital side and remaining 34 CR is the GCP.
Okay. And let me come to you, Shailesh ji. Give us a sense of how you see the build out, play out of this CAPEX that you're doing. How quickly does the CAPEX in terms of the cycle come on stream and what does it do in terms of revenue contribution for you?
See, let me explain you. We are at manufacturing 12 products, are adding another 6 products in our segment.
Okay.
So putting together, there will be total 18 numbers of products for which we are making an expansion. Now this expansion program is for 140 crores for building construction, factory building construction and machineries. 100 crores is being used for the purpose of repayment of our existing short-term borrowings. And remaining 36 crores for GCP. 26 crores will come by way of OFS. So the construction stage is like this, we have completed practically 75-80% of the construction work. And in fact, first phase of installation work is also already started for the machineries. We expect that by second week of January, we should be able to start our production facilities in phases.
And sorry, Shailesh, give us a sense of what this does for you going forward on your margins as you scale up. Is there something that we can see in terms of margin upside as a result of the scale up or will margins largely remain the same? And what of competition? You're going into 6 new products. How does competition shape up in those products?
So basically, obviously, we have tried to select those products where we will have better margins, considering those only our new 6 product categories we are adding. And this will definitely improve our EBITDA and PAT in the coming time. And these are actually aligned towards the new energy segment. So I believe the margins will from here, once the expansion is over, and it will start churning the revenue. So for surely, this will be really better.
Okay, and Mr. Rathi, copper is a big part of your operations. Given that copper is at an all-time high right now and there is so much volatility with commodity prices, how do you factor in, how do you hedge your prices and your raw material costs and what impact could it have on your margins going ahead?
Yes, you are right. Copper is at all-time high. Of course, copper is definitely in demand. So not only the basic copper, but the downstream industry, whatever products we are manufacturing is really in good demand. And this made us to think about, expanding. So about the volatility of copper, yes, it's truly completely volatile copper, but it does not at all affect our business because we have a completely back-to-back risk-free business model, where any increase or decrease in the copper price does not affect our sales. The moment the customer decides to place some order, he has to first actually hedge the LME with us. So whenever he places the order, he has to first book the copper. We also book back to back with our supplier. Similarly, the exchange rate with the same amount is also hedged on RBI. So completely copper as well as the exchange rate are fully hedged, so it does not affect at all us, whether the copper goes up or low. So
Okay.
yeah.
So fully hedged is
Yeah, fully
the
hedged,
strategy.
yeah.
Okay, that sounds good. Mr. Rathi, talk to us about your financials. You have consistently been profitable. What is the target, if you could share with us? I understand at this point you may not be able to give us a fixed number, but what is your view on the sustenance of your profitability and your overall financials?
I can tell you one thing. Last 40 years, we are completely in profit.
Profit, yeah.
And last 5 years after Corona period, we are making consistent growth. This growth has make us to think that we should go for the expansion because of the market demand. In fact, our customers are asking us that we should go for further expansion because of their requirements. And for that, we are going for this expansion.
Okay.
Okay. How do you see the product suite develop? Currently, 48% of your product is in transmission or caters to the transmission segment. Sailesh, does that change materially going forward?
No, so material will remain copper and aluminium, of course, but the finished good categories will change. And of course, it is aligned towards power and distribution. So we are coming up with continuous transports conductors, which goes largely into high voltage DC power transformers. And also we are going to manufacture some products manufactured from aluminium, which goes into the renewable segment, EVs. Copper is also we are manufacturing some copper products which will go towards EVs. So these are largely towards those segments which has a high growth. We can see that renewable and EVs, these are the two real good segments. Besides this, certain products we have also planned to manufacture which will go towards the artificial intelligence and data center transformers. So these are all aligned towards the new energy segment.
Okay, and also talk to us about the debt level that the company has, the total borrowing, because a part of your IPO is also towards debt repayment. After that component, after the IPO procedure is done, how much debt will still be there?
So frankly speaking, currently we are a zero debt company.
Okay.
That is the best part of our company. We don't have any long-term debt as of now.
Okay.
Only it's the working capital debt we are having. And whatever we are raising out of this current 148 crore of working capital debt, 100 crore will be paid back. So almost we will be a zero debt company.
Okay.
Besides this, whatever the new equity is being raised, so 140 crore will go towards the new expansion. So as such, we will be almost having no debt.
You've traditionally, Mr. Shamsundar, you've traditionally had a ROCE, which is return on capital employed, in excess of 20%. Now this is a large chunk of capital you are raising. Can you continue to get that kind of ROCE in place?
Yes, definitely. Because market demand is there and we are already in the business for last 43 years.
Yes.
And we are sure that we shall be able to maintain it.
Okay. All right. Thank you so much, both of you gentlemen, for coming in and speaking with us. That's all the time we have. What we're going to do is we're going to slip into a short break, viewers. We have had 3 IPOs today open. We've given you perspective on all 3. And what we'll do is we'll slip into a short break. On the other side, we'll continue corporate conversations here on ET Now. Stay with us.